we can go through it. If there's anything that we do not really get clearly, then we can always check through it again. Yes, the class is recorded. So I said that the very first topic we are going to discuss is market structure. Now, why is market structure important? Now, let me be writing it out so that so our very first topic is market structure. Now, you may wonder, why are we dealing with market structure? Why is market structure important? Now, the thing is that market structure is actually important because market structure actually tells us what the market is trying to do or what the market is doing at a specific time. Just like um, a house with a foundation, whoever is going to build a house, the person must first lay a foundation, Abi. So whoever is going to build a house, the person must first lay a foundation. Now that foundation that that person lays is what that person is going to build on top. And that is what is going to hold that particular building or structure together. That is what we call the market structure in this sense. Now, market structure is just the basic and one of the most important concepts of trading in general. Now, this market structure applies to all markets in general. So, whatever market you are going to trade, as long as you are going to be dealing with candlestick, you are going to be dealing with charts, you need to have an idea of market structure. Now, under market structure, there's something we know as the basic structure. Let me use ST for it. Then there is something also known as the advanced market structure. Advanced market structure. So I just usually use AMS for that. Now, so under structure, we have the basic and the advanced market structure. So for today, we are going to be dealing with the basic market structure. Then probably by the next class, then we'll focus on the advanced market structure. So for now, we are going to be dealing with the advanced market structure. Now, when we talk about market structure, like I said before, it's just as the foundation, the basic foundation of trading, the basic thing. Now, this market structure, it comes in two parts, the basic market structure and the advanced market structure. Now, under this market structure in general, whether the basic or the advanced, the market structure, we have generally three types of market structure. We have generally how many types of market structure? What are the
Three,
reply?
three types of market. structure.
Very good. So under the market structure, we have three types of market structure. Now we have the bullish structure, we have under here we have the bearish, and then lastly we have the range. So most times people talk about the bullish and the bearish market, and most times they just leave the ranging market out of it. Now, for the course of this lesson, we are going to learn the three types: the bullish, the bearish, and the ranging market. Now, just as the name implies, bullish. When you hear bullish, what actually comes to your mind the very first time? When you hear something is bullish, what comes to your mind?
Just don't hear
I know hear you. Please
they
don't make
go
noise.
up, they go up.
Please don't make noise in the class, or I will remove you. If you make noise, I will remove you. You should not cause distraction to other people. Yeah. Bullish, bearish, and range. Now, when we hear something like bullish market structure, it simply means the market is going up. Now, it is simple why it is called the bullish market structure. Now, for the bullish market structure, by default, on your trading view, it is represented by a green candle. So when we say something is bullish, it's either it is going up or it is buying. It's as simple as that. It is going up or it is buying. Then for the bear, it is going down. When I write down, especially those that are very that are beginner. Now I know that this may be too basic for some persons, but it's something we need to do because at the end of the day, we are still going to refer to them. So there's no way I can skip it. You will need to have the knowledge from my own view for us to be on the same page. So I said under basic market structure and advanced market structure, we have type. Now, these types are bullish, bearish, and range. Now, I said for the bullish, it means that price is going up. And for the bearish, it means that price is coming down. Now, there is a simple logic that you can use to remember this thing. Now, the thing is that I made a research why it is called a bullish market and why it is called a bearish market. So based on my research, the thing is that I found out that it is called a bullish market because when a bull attacks its prey, when a bull attacks its prey, they always use their horn to lift the person and throw the person upwards. That is why bullish market it always represents going up or something is buying. The process of the bull throwing that person upward. So it refers to bullish market. And for a bear, they usually crush their prey to the ground. So whenever it's going down, they say the market is bullish. And sometimes when market is ranging, you usually hear something like the fight between the bull and the bear. So that's just the basic thing. Now, a pictorial illustration of how the bullish market look like is something like this. This one going up, Abby.
Yes.
Yes.
So when it's going up like that, it is called the bullish market. Now, there are criteria that makes us to conclude that this is a bullish structure. We are going to look at them. We are going to look at them. For now, remember, we are still dealing with just the basics. Now, the same vice versa for the downtrend or the bearish market. We can call it downtrend or bearish market. When a market is selling, if you notice now, this one is facing down and this one is facing up. So the bullish goes up and the bearish comes down. Now, this basic market structure, you remember I said that we have basic and advanced market structure. Now, this basic market structure now, you are most likely going to see, in most cases, you are going to see it more clearer on higher time frame than on lower time frame. Now, the movement of the market in an advanced market structure, you are going to see that one more on a lower time frame. But keep in mind that first we are dealing with the basic market structure. So for the basic market structure, the higher time frame sometimes on a bullish trend is going to look just like this, going up a bullish trend. Then that is for the higher time frame, and the same thing. So it's not going to be exactly 100% like this. So, but if you switch to the higher time frame, you are going to see it more like this. This is not picture perfect of how the market move. It's just a representation of what the market does. Like in a uptrend, price keeps breaking the highs. Now let's label this particular basic structure. Are you guys following?
Yes, sir.
Okay. But give me 1 minute. I want to get water. Sorry, I'm back. So, like I said, there are criteria that makes it a bullish market structure, and there are also criteria that makes it a bearish market structure. So when we see these things on the chart, we know that, okay, we are in a bullish market condition. Now, as the class progresses, we are going to understand and see the advantage and disadvantage of these things and how we can put them together. Now, for the advanced market structure, let's do a bit of a sketch, a rough labeling. So the very first, now, what trend is this based on our discussion so far? What trend is this?
As an uptrend, sir. A bullish market structure.
You are right, uptrend. Now, for a uptrend, if we want to label the uptrend, so we usually start with this place. Remember, price is bullish, price is going up, price is going higher, Abby.
Yes.
So we start with H. H means I. H means I. like normal regular high jump. H means high. Then this up here becomes higher high. Do you know why it becomes higher high? Eh?
Because it's higher than the previous high.
Exactly. Because this high is higher than this high. So this place becomes a higher high. Now, after a higher high is created, price usually does something here. It will create a low. Now, this is a high. This is higher high. And now this is a low. If you notice, this high, oh sorry, this next high now is higher than this one, Abby. And
Yes, sir.
now applying this same principle we applied here, this one will be called what?
Higher high.
Higher high.
Why?
Because it's higher than the other high too. So
Okay, because it's higher than this one, becomes the higher high. What about this one?
higher low. Higher low.
So why do we call it higher low?
Higher than
Because
the previous
low
low.
higher than the previous low.
Okay, let me give you a proper explanation to that. You are not wrong. Oh. Now, in the uptrend, you see these eyes we put in now, they are called the eyes. The eyes. And now, this guy, if you know, they are at the bottom of this. So they are called the low. Anyone that is at the bottom, it is called the low. Now, if you notice, this one is also called a low abi because it's at the bottom, right?
Yes.
But it is higher than this particular low. So we call it higher low. Clear abi?
Yes, sir.
So now when we get something like that, price puts in another leg of price. So remember, this one now, or this new high now, is higher than this guy abi?
Yes.
So this one becomes what?
This same higher high.
Higher. The principle and the logic is simple. Even if is the most recent high is higher than this very one. So this one becomes the higher high. And then what do we call this?
Higher low.
Now it is called higher low because if you notice, this low now is higher than this one, Abi.
Yes, sir.
Now, if the market continues to create structure for us, we are going to see more of higher high and then what?
Higher low.
Exactly. So this is basically how we identify uptrend. This last major high, the recent high will be higher than this, and the recent high will be higher than this. So we call it price breaking highs. Price breaking highs because price broke. This one was the high. Price broke above it, and then price broke above it, and then price broke above it. So even if it's on the high side, but price is still breaking above it, so it becomes the higher high. So now so price go dey do until just dey go until there is another action before price will now determine which direction it will go next. Now, the same thing for the bearish trend. Now, if we are to start the bearish trend, what do we call here?
That's low.
So we said we call it low. But remember, remember, if we are going to call it low, but this looks like is in the upside now, abi?
Yes.
Abi my eye dey pain me.
Yes, it looks like the upside.
Uh-huh. Even if it looks like the upside, but see where you are going to focus on now. Down, 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 down. So this one is also the downside though. So this guy now will now be called what? This particular one is the upside. Now remember, we've identified this trend to be something we called a bearish trend, Abi. We just put that.
Yeah.
So in a bearish trend, the first leg is usually the low, and then this next one, this one here becomes the what?
Lower high.
Lower,
Lower low.
lower low.
Eh?
Lower high. Lower high.
Lower.
Lower high.
So why is it called lower high?
See, because it's still higher than other lower range.
Exactly. You know, we are going to the downside though. That is where the L comes in. We are going to the downside. That is where the L comes in. Now, this H is I, which means is the I side of this downtrend that this thing is focusing about, the I side of this downtrend. So if we are to apply the same logic, this one now becomes what?
Same lower high.
Lower I. Because we are going down low, but we are still trying to put in a new I. So this one becomes what?
Lower low. Too. Sorry,
Eh?
lower high. Lower high.
Okay, so what about this last one?
Lower
Low.
high.
No, that would be low now.
Remember, it is the
Okay.
high side of the low. It is the high side of the downtrend. So it is supposed to go down. If you go down continuously, see you vanish come off for this my monitor that is not the same again. It will always be lower high. Now this is the reason. It is because as this one is going down, this one is going down the most. So where will this one be called? Remember, is
L-
the low of this bearish trend. Is the low of this bearish trend. So what should it be called?
Lower low.
High.
Low of this trend and it's lower.
Be high now. Lower low.
So what of this one?
Lower
Still
low.
lower low.
What of this one?
Same
Lower low.
lower low.
And this one?
Lower
Lower
low.
low.
Eh?
Continue.
What did you say?
Lower low.
Lower
Continuously.
low.
Okay, so the reason why it is called a lower low is because it's on the low of this region, it's on the low of this village. Now, the village is taking them deeper or below, deeper or below. So, if you notice, we are in a low, but this low, very low, is lower than this one, abi?
Yes.
And this
Yes.
one is lower than this.
The previous one.
And then this one is also lower than this.
Yes.
So that is how they get their name, the lower low and the lower highs. It's as simple as that. Be clear, abi?
Yes.
Yeah.
So now, this is how the market usually moves. So on the higher time frame, both higher time frame and daily time frame, but you are easily going to spot it better on the higher time frame. So, like we said, because we decide to go above this last high, this one becomes the what?
Higher high.
And then this one becomes the what again?
Higher high still.
Because it is higher than this.
Yes, sir.
And then this other one is higher than this, Abby.
Yes.
And then this one is other than is what? Lower than this, Abby.
Yes.
Okay, so now let me mark it well. Let me mark it well. So price breaks the previous high, breaks the previous high, breaks the previous high. Meanwhile, when price does this, price do not break any of this. So we usually say price is protecting the low and breaking the what?
The high.
Highs.
And so also keep it in mind. In a bullish market condition, price will take out the high, will always come for the high, and then it will protect the what?
The lows.
Exactly. Exactly. So it's the same thing for the bearish market. Lower low. This low now is lower than this. This low
Yes.
is lower than this, and this low is lower than this. So that is where they get their name from. The lower low, higher low, higher high, and higher low. Hope say I know the confusion.
No, no, no.
Not at all, boss.
It's smooth, Abi.
Yes, very
Yes.
smooth.
So if so far so good, if you have any question, free to ask. So, but before we proceed, before we go ahead to take more information, let's see example of this on the chart. Because after this class, I'm going to give you an assignment to mark out all these figures. The high, the low, higher, low, higher, low, higher, 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 so something like that. So now let me look for something that has a clean structure. Okay, so let's actually use this particular range. Let's just use this. Okay, no, these are not too day exactly as I want. So let me check this guy. Let me look for 1 hour. Okay, so we can use this range. Let's leave this one first. So let's focus on this particular range. So what can you see here? Yeah. Can you see anything here?
An uptrend.
Yeah,
Yes, an uptrend.
exactly. An uptrend. And remember, we said that for an uptrend, price will protect the low and then price will break the what? The high.
I
Now,
Highs.
High.
now when you are looking at it on your chart, let's start from this particular point too. This was the lowest point price got to around this level, Abby.
Yes.
So this
Yes.
one becomes the what? the high.
High.
So now this thing we are going to mark now. If you are not really too good with it, if you are still learning, you are new, you can always switch to line chart, which is this one. You can always switch to line chart and look out for them. So this is the lowest point price got to before price reverse. Now, if you are to do that, this is the next highest point price got to before we saw a big reversal, Abi.
Yes.
So this one will become what?
Higher high.
So the others, are they correct?
Sorry, can I talk?
No.
Eh?
Sorry,
Which, which one be sorry? What's wrong?
please I want to I don't understand from that place you just put H now. I did not understand what you said there.
Remember, let's go back to this guy. Um, I think we are using GBP my chart don't vanish. Was it GBP we are using? Wait here, I'm just I don't vanish. Can you hear me?
Probably a different broker.
Wait, let me see. There are 43 drawings here. Okay, is this one? Is this? So we are marking an uptrend, and we say that you see this H here. We say the beginning of the uptrend because we are going up. The beginning we mark it as the I. Now I open this chart. We are starting from this particular place now. We are starting from this particular place. So if we are going to start from this particular place, this place becomes the I, Abi.
Yes, boss.
Now, I said it is so because it is the lowest point price got to before price reversed. You mark it at the lowest point price got to before a reversal comes in. Gift, are you there?
Yes, boss.
Yes, yes, I'm here.
Do you understand what I talk here, Abi?
Yes.
So it is the lowest point price got to before price gives us a
Reversed.
reversal. So this is the I. I say after that, after I like this in the uptrend, the next year is that higher low, Abi.
Yes. Higher low.
No, no, no. That'll be higher
No.
high.
Higher high.
We are in the uptrend, and this is the upside of the trend. So if this is the I, this is the sorry,
Yeah, hi.
sorry, I don't mistake. This is not the I, this is the low. I don't mistake. Remember, this is the downside now with this.
Lowest.
So this is the downside, it's not the high, it's the low. I don't make mistake on that one. So, but that's just it is not high. It is the downside, the downside. It is the low. Then this one,
Low. Higher low.
no, it's not higher low.
I mean lower
No, it's not higher
lower
low.
high.
Higher high.
Higher high. Are you
Now,
sure?
now let's go back. Let's go back. This session will end in 1 minute and 55 seconds, which means we will spend 45 minutes already. So let me go back here. So this is supposed to be, it's because the way I marked it here and I confused. So this one is not, we started from here. Started from here. So it is the low based on where we started from.
No.
So this one is higher low. Just like that. Now the only difference with that higher low. So we correspond with this one. This is the low because this is the downside. This is the downside, this is the low. Now, this particular low now, this one is higher than this. This one is higher than this, and this one is higher than this, Abby.
Yes.
So they are called the higher low. And this very first one
I'll
is
be high.
high. Exactly. Exactly. It's because we started from the downside now. High. This one is higher than this, higher high. This one is higher than this, higher high. And the next one that will come will still be higher high. It clear now, Abby?
Yeah.
Okay, so after this session now, I'm going to send another link. We're just going to do it for 5 minutes to round up. Just 5 minutes. For this one will soon end now. I will send the record immediately this one ends. Understandable, Abby?
Yes.
All right, so
Okay, boss.
this one will end in a few seconds. Let me just wait till it ends.